On January 20th, 2025, the AI industry was shaken overnight. A new model called DeepSeek. It launched in China and it was outpacing expectations, undercutting competitors, and causing one of the fastest drops in AI market value ever.
Welcome to 5 Minutes, your quick dive into the wide-ranging world of insurance, technology, and leadership. I'm Miguel Edwards, and I'll be your guide as we explore these topics that are transforming not just the insurance industry, but the business world at large. Along with sharing observations I've made over the span of my career in insurance, technology, and operations, I'll be chatting with some of the brightest minds in business and leadership. Whether you're a seasoned executive or a rising star, an industry expert, or just curious about how technology is revolutionizing insurance, this is your perfect spot for your weekly dose of insights. This is 5 Minutes.
Investors were panicked and stocks crashed. Billions vanished overnight. But was DeepSeek really as good as it seemed? You see, DeepSeek wasn't just another AI model, it was an absolute game changer. It was created by this Chinese startup and claimed to match GPT-4's power, but at a fraction of the cost. So what made it different? Well, we saw faster speeds, we read about lower costs, and we also learned that they leverage a unique hybrid architecture which combines transformer and diffusion models together. So within hours, we saw major tech companies already starting to use it and adoption rates shot up by 300%. But then came the crash. And US-based AI giants saw valuations plummet overnight. NVIDIA, for example, which is OpenAI's hardware backbone, they saw a $600 billion market cap dip in the days following DeepSeek's debut. We also saw Anthropic and Mistral, which were fresh off multi-billion-dollar funding rounds. They faced all sorts of investor hesitation and backlash. And even Google and Microsoft, which had invested heavily in their proprietary AI infrastructure, they saw all sorts of strategic concerns rise as cost-efficient alternatives were emerging and facing questions from investors and their board. So by week's end, the AI industry analysts were calling it the most rapid valuation realignment since the dot-com crash. But just as the market reeled, security experts raised a red flag. A major study by Wiz Research, they uncovered critical flaws in DeepSeek's system. What did they find? First, they found data leakage risks. So hackers could use prompts to extract sensitive training data. They also discovered that the outputs were manipulatable. This means that attackers could subtly change DeepSeek's responses, spreading misinformation. And then finally, they discovered a series of zero-day exploits. These were security gaps in the API stack that could let hackers break into company systems that were using that platform. And these weren't just hypotheticals, guys. These were real, and within days, we saw that security researchers were showing how bad actors could hijack apps using DeepSeek's APIs. And banks and governments and big businesses, suddenly they had major security concerns on their hands. This is a wake-up call, folks, that not everything that's faster and cheaper is better. AI isn't just a tool anymore. It should be considered infrastructure. So just like banks and transportation and power grids, there needs to be serious security measures architected into these solutions. So what has to happen next? Well, companies have to vet third-party AI like they would any other critical software. And then also, too, regulators must enforce some sort of transparency in AI security. And then finally, as consumers, we need to demand security alongside all of this innovation. Because if DeepSeek has proven anything, it's that AI isn't just changing the world, but it's exposing risks in ways that we're now just only beginning to understand. So the AI race, it's moving super fast. And in our rush for progress, we have to make sure we don't ignore security. The biggest danger isn't just the hackers, it's our willingness to trust too quickly. So with that, stay informed, stay skeptical, and remember, what's cheaper today may cost us a lot more in the future.
Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.